Hello and welcome to Realtor.com's Google Hangout, sponsored by Prime Lending. I'm Leslie Piper, your host, and we're pleased to have you joining us to discuss mortgages. I'm here with Mike Matthews of Prime Lending. Mike.
Good morning.
Good morning.
Been in the mortgage business for 20 years and work for Prime Lending today. We're a national lender. We have 300 branches all across the country, and you can visit us on primelending.com. Thanks for the invite.
Absolutely. And Tracy with Realtor.com.
Hi, I've been with Realtor.com for about 15 years. I lead the teams that build tools and calculators and other resources to help buyers and sellers make really smart decisions about real estate and about lending.
And lastly, our own Jonathan Smoke, the chief economist for Realtor.com.
And like all great economists, I'm here for entertainment value.
And I am Leslie Piper, Realtor.com's housing specialist, and I'm also a seasoned realtor in the San Francisco Bay Area. So welcome. And we're here today to talk about mortgages. Realtor.com provided a crash course that can be found at Realtor.com/Mortgage 101. It's a great resource for anybody who's thinking about buying a home, and we had a lot of individuals and consumers that use that resource, and so that's why we decided to put together this panel of experts to really talk about what's going on with the mortgage industry and how one can really prepare to buy a home. So we're just going to jump into a couple questions. First, what different loans are out there to buy a home? Mike, hopefully you can shed some light for us.
There are lots of options. So one of the benefits of speaking to a credible lender is they want to ask you questions and understand what you're looking for and where you're looking for. But there are federal, there are government loans, FHA, VA, there's a bunch of different options with not as much down payment as you would think.
There are a lot of options. I'll describe it from my perspective. It's sort of like you're shopping for breakfast cereal. And it could be that you're having to go down the cereal aisle at a super Walmart, but it could be you're stuck with just the cereal boxes that are at 7-Eleven, because it's all dependent on where you live, the property you're buying, and of course your personal financial situation. And the best way to cut through that and get the right box for you is to actually talk to a local professional. But I will throw my economist spin on this, and that is make sure you look at the duration, how long you expect to be in the house. Because one feature of a mortgage that a lot of people just default for the 30-year fix, you're really trading off the interest rate, and that is an important factor on qualifying and what you're going to pay. And sometimes you might be better off with a shorter term mortgage.
And we're going to call it the interview process the first time that we speak. Those are the questions we're going to ask. We want to understand how long you're going to live there and what makes sense for you.
I couldn't agree more. And as a realtor, I always tell my buyers who are out there, do your homework. Go online, do your research, look at all the different resources that are out there to really educate yourself. And choosing the right realtor as well as the right mortgage broker or lender to help you through the process is just a great first step to make sure you're successful in finding that dream home. So, thank you for the feedback on that.
And to this point about how long you might be in the home, Realtor.com has a great tool that's a rent versus buy calculator in the mortgage area of our site that allows particularly first-time home buyers to really explore if they were to buy a home after how many years would it take for what you're paying for your mortgage in that home to be equal to or maybe even less than what you've been paying in a rent, and lets you really visualize but also maybe play with some scenarios that might work for your personal situation.
Yeah, that's a terrific point. Thank you for sharing that. And so next, if you are buying a home for the first time and don't have 20% to put down, is there any way you can avoid PMI?
Well, let's start by defining what PMI is.
Great.
So PMI stands for private mortgage insurance, and that basically applies when a consumer puts less than 20% down on a loan. And the reason for that is that loans historically that have less than 20% down have higher default rates. So there's risk there that literally has to be accounted for, and that ends up being insurance that adds to your mortgage payment. So when you put less down, the trade-off is going to be you actually have to spend more on a monthly basis, and it's therefore going to impact your qualification. So let me play just a simple scenario from an economics perspective. Let's assume you're the median income household in the country today, and you're buying today's median priced home, which is about $205,000. If you finance that 20% down with a 30-year fixed rate, it would take about 26% of your income. So you would qualify, assuming everything else in your history is good, and you'd be able to afford that because that's underneath the 28% threshold that is a good guide for affordability and qualification. But if instead you needed to opt to pay just 3.5% down and to go with an FHA insured low down payment option, you'd end up having to spend 33% of your income to cover the insurance and the higher monthly payment expense. You wouldn't qualify anymore under those standards. So the trade-off of having a lower down payment might mean a different kind of home, a cheaper home. So one sneaky way of answering that question from my perspective is see if you can, by looking at a different kind of home, put more money down. But I know that doesn't apply to everybody, and you've probably got some options that you can think of.
There are many ways to avoid private mortgage insurance, and without getting too complicated, you can do a first mortgage where part of the lien is in first lien position, and you could do a second mortgage to avoid mortgage insurance. There's also lender-paid MI, or mortgage insurance, where you take a little bit higher of an interest rate, but then you'll be able to write that off on your taxes. So all of these things seem complicated, but that's what we're going to cover with you the first time that we speak. Those are the questions we're going to answer.
And again, that's why having a mortgage broker that you really trust and a lender who can walk you through the process just is really going to help you get an understanding, because it is complex, and to help somebody really educate you is so important.
Yeah.
I want to add one other thought. For buyers who are in the military or veterans or families of veterans, I think it's absolutely worth exploring what the Veterans Administration offers in terms of a VA loan. One of the key attributes of a VA loan is no PMI. Effectively, the federal government is picking up the risk that you talked about, and there is no PMI with a VA loan.
And a very light down payment.
Yes.
Yeah, Tracy, thank you so
Absolutely.
much for sharing that with us, because that is really important for veterans to certainly be aware of loans that are available to them. So, and I just want to remind everyone who is participating on, if you can go to Twitter and do hashtag Mortgage 101 and send any questions. We want this to be interactive. We want the audience to really share their questions, and so that we here, the panel, can help them throughout the process of buying a home. So next, if you don't have any credit history, what documents do you need in order to get a mortgage?
There's some non-traditional ways, and it's not, in this question, it doesn't sound like it's about having bad credit, it's just not having any credit.
Yep.
So there are ways to validate and to verify payment on utility bills, cell phone, your rent. So it's also important to note, this is where you start establishing your credit. So if you don't have anything on your credit report, again, it's not bad, there's just, we can't tell how you're going to pay back your loan. Get a credit card, pay it back carefully. Your car loans, those things help establish credit and help you get a mortgage.
So true. And I think opening a credit card, as Mike said, is a great first step. Just be responsible. It's easy to sort of forget to make those payments, but if you do that, then it's just going to be an avalanche sometimes of creating bad credit. So in order to create good credit, you have to make responsible choices.
Yeah, I think that's really one of the things that particularly younger folks who are thinking about preparing to get a loan really need to stop and think about. You may not feel you need credit or need a credit card while you're still in college or when you've just moved out, but the notion of the time it takes to build up your credit history, even if you get a card with a small limit and you buy a few things on it every month and you pay it off every month, you are establishing that track record, and
True.
that's valuable.
True. And you want to create a great track record for yourself, and you have to plan for the future.
That's right.
When you are buying a home, you have to save money to be able to do a down payment. You have to be able to get a good mortgage in order to do that. You have to create good credit. So it's being a responsible consumer and really planning for the future.
Yeah.
So next, if you have bad credit, what things can you do to improve it?
You know, we talk to a lot of borrowers that think they have bad credit, and a lot of times that's not the case. So the very first thing we're going to do when speaking with a customer is we're going to run their credit and see what they've got. So if you've got bad credit, a lot of times there's aged activity on there. So is there an old collection, something you didn't know about, a medical, something from school that you didn't know? And so you want you want to have somebody help you and advise you and look at your credit and make recommendations. There's also some different credit monitoring services where you can get your free credit report and also be alerted if there's any fraudulent activity. So you need to know what's going on with your credit.
And aren't you able to actually get a credit report once a year and it won't
Free.
affect your credit?
That's right.
Yes.
Which is great. And again, I think there's a lot of individuals out there who are hoping to be able to buy a home, but they know that they have bad credit or they're afraid that they do. You just need to go and check. And I think really find out, do you have the capacity to buy a home? Home ownership is something that so many people take pride in, and it's such a great accomplishment. So you go out and take those steps to really find out what your credit is and talk to someone like Mike at Prime Lending to see if you qualify.
And when you do run your credit report each year, don't just look at the number, the score. Just take a quick look at what's on it. You'll be surprised. There may be some auto loan that you paid off 15 years ago, but for some reason it's just lingering. And an hour or so spent on the phone can go clean some things out of your credit report that you know shouldn't be there. So it's kind of like spring cleaning. Tidy it up every once in a while.
Very true, very true.
And speaking of the details, one of the factors that most impacts your credit rating is what is referred to as your total debt to credit ratio. And what they're doing is they're literally looking, let's say you have 3 credit cards, and each one of them you have a $5,000 level of credit on each one. That's a $15,000 total credit. But if each month you primarily use one and you're spending $5,000 on average every month and still paying it off, from a credit standpoint, you've used a third of the credit available to you, and that starts to look like a risk. So knowing your own credit ratios and paying down the debt that appears when you apply can help your score.
That's a really great point. That even helped me out. And next, where do you see mortgage rates going? And I know, Jonathan, since you're our economist.
Put me on the spot.
Absolutely. Tell us what you know.
So rates are going up. There's no question that rates are going up. The key questions are, how much are they going up, and exactly when will we start to see kind of firm rates that are no longer going to dip back down on occasion? So we're forecasting we could see as high as 4 7/8 by the end of the year. I looked at all the current major economists' forecasts, and you've got an enormous range of 4% on the 30-year fix to almost 5% on the 30-year fix. So that's a pretty big spread.
Absolutely.
And if you understand what each percentage point means to you, that can have an enormous impact on what you can qualify for. The other thing that I would say to make sure you're expecting in this market is volatility. Rates are going to be going up and down. So for example, 2 weeks ago, the 30-year fix was 4.75. Then a couple of financial market things happened, and they jumped up 11 basis points overnight to 4.86. Then the following week, they coasted a little bit down. Yesterday, it was at 4.83, and I'm using the mortgage app on Realtor.com. Today, it is 3.78 for the 30-year fix. So what have I learned from that and monitoring this is, wow, rates are bouncing up and down daily. So if I were looking at a mortgage this year or looking to buy, and you're sensitive to the rate that you're going to pay, I would learn a couple of key words. A lock and a float down, which maybe you can explain what that means, Mike.
Yeah, to your point, rates move up and down every day. It's hard to keep track. I think it's important to note we're in historical times. I mean, you talk to your parents, these are rates that they've not seen. But at Prime Lending, we do have a float down. So if during the processing of your loan, if rates do drop prior to closing, you can float that to a lower rate. So yeah, locking in, I wouldn't wait, definitely.
Yeah,
Thanks to Jonathan for mentioning the Realtor.com mortgage app. I want to add in there that those rates are custom to where you are. So the rate in a zip code in California might be different than a rate in a zip code in New Jersey. And so on the app, you can actually put in the zip codes of the areas that you're potentially looking to buy, and you'll be able to watch the rates over the time, particularly as they go through kind of this volatility that you were talking about.
Yeah, it's amazing. It's like shopping for gas. Every station has a slightly different price. And when you start to become aware of it and have a tool like what we have with the mortgage app, you have a convenient way to see how those rates are varying for you.
That's a great point. So again, our audience, please go to Twitter, #Mortgage101, and send any questions that you have. And we have received some questions, and I think we're just going to dive right in. So from Lisa on Facebook, Lisa asks, how much can I afford and what are the payments going to be?
So
Mike?
many variables to that, right? It depends on where in the country you're buying and how much of a home are you trying to buy. So you probably, typically you know the neighborhood you want to be in, or you have a feel for what you want to, with the area you want to buy. Once you speak to a loan officer, we're going to pre-qualify you and pre-approve you and help understand what kind of payments are you looking for. You don't always have to spend the most, right?
Yeah.
So it depends on what you're trying to do.
That's true.
And I know we're talking a lot about the kind of the mortgage loan side of affordability, but there are a couple of other factors. You need to be aware of what your property taxes will be where you are looking, and that can even vary by county.
Hugely.
Looking at a home in one county and looking at a home in a different county could be the difference between, you know, 1/10 to 1/4 of a point on your property taxes each year. So that's something to keep in mind. Also, PMI, mortgage insurance, which we've talked about, the cost of the loan, and even factors such as how green is the house. Some of those other things go into affordability.
True.
So this is also information that you can find on the mortgage app that we were talking about. We have an affordability calculator that helps you evaluate those, particularly when you have a couple of homes you might be interested in.
True. And I always say, just don't bite off more than you can chew.
For sure.
A lot of times buyers get so excited and they start looking at homes and they get outside of their price range, and you just don't want to get buried and be house poor. I mean, there's so many other wonderful things you can spend money on in your life, and improving a home is always good fun as well. So next we have a question. Let's see. So we have a question from Laura on Twitter. How long does it take to get a mortgage?
So if you were to call in today or to go meet in one of our branches, we're going to have the initial, what I'll call an interview, a discussion. That's going to all occur on the same day. So we're going to be able to analyze your credit. We need to understand your income, how long have you been in the business that you're in, and really help find the right solution for you. Let's say today we locked in the interest rate, and if this is for a purchase loan, we're going to work to your contract. So we can close a loan in 2 weeks, or it may mean that you need 30 days. So it really is going to depend on the relationship and the arrangement you make between the buyer and the seller.
Mike, wouldn't you say that it also has to do somewhat with how organized the buyer is? Is that buyer able to, you know, provide the documentation, get their bank statements,
There's a fair amount of
provide their
paperwork involved.
W-2s, those
Sure.
sorts. So be prepared to be organized during the process. I
Yeah.
think would be very
That's a good
helpful.
point.
That's such a good point.
Yeah.
So now we have another question. So Jeff on Facebook says, what's the difference between being pre-approved and pre-qualified? And Mike, I think this is a great question for you again.
So pre-qualification is not going to hold the same weight as a pre-approval. So you can go online and get somebody to print you out a pre-qual letter, and you'll find that if you're negotiating with an agent and they're looking at a pre-qual letter, it's probably not worth as much to them. A pre-approval letter, we're actually taking a look at your full situation. We're providing a letter that's stating that based on what you've provided and that we validated, you're approved for a loan. And so as an agent, I know you probably see multiple offers, and the pre-approval letter is the way you want to go, and we'll help you with that.
Yeah, in today's marketplace, especially what we're seeing here on the West Coast, is we're having multiple offers, and you absolutely have to be pre-approved and have a current letter. And because people are putting together very organized packages with their offers, photos of their families, writing letters that are individualized with the actual property. So there's just so many steps that buyers
please,
are taking.
Please, let me buy
Yes,
your
there's
house.
a lot of begging.
Yes.
Photos of babies and dogs, and anyway, it's been a very interesting market, and the market has definitely been hot. But having that pre-approval
Before
is
you're even shopping,
essential.
right?
Yeah,
I
you
would
just
want
got to get
the
it done.
agent to know you're ready to roll. So,
You got it.
Yeah.
You got it. So,
Yeah.
Good. And next, so Chad from Facebook says, what kind of down payment assistance is available?
So this is a pretty interesting question. The first thing I'd want to say is know that there is such a thing as down payment assistance. So you should absolutely ask your realtor about it, ask the lender that you might be working with. But there are kind of two major forms of down payment assistance to think about. There are some programs that are about you as a borrower that will evaluate your personal situation, your history. It could have something to do with the industry that you're in, things like that, where you as a buyer can qualify for certain down payment assistance programs. But There are other programs that have to do more with the property you might be interested in. So for example, a city might be sponsoring some urban redevelopment. They may have taken out some old tenement apartments, rebuilt some new construction condos, and they've got a great down payment assistance program that is designed to bring in families into an area that they're trying to redevelop. So keep in mind that down payment assistance can be available for you. It can be available for the property you're interested in. Sometimes it's both, and you definitely need to ask about it, know that it's there.
Thank you.
It's a great point. We see mortgage credit certificates, we see first-time homebuyer programs, and they're not always advertised on the wall. So
No, that's right.
Having that local agent or a lender that knows what's going on in your community.
Thank you. That's
Makes a
really,
difference.
really
And I would
useful
also add,
information.
don't forget the bank of mom and dad. A lot of
For
people,
sure.
I think, approach this process of qualification as, I'm not going to tell them that dad's going to cut me a check. When in reality, you can qualify for a lot of mortgages with gifted money
funds.
that go towards your down payment. But you need to be upfront with your lender about that so that they make sure that the program that you're interested in will work.
That's so true. And it has to be an open book. You have to be forthright with your lender and let them know if, again, there is some bad history of your credit, or if you're getting monies from your family or other resources that money is coming in from. So you really have to trust that lender, and that's why choosing somebody that you trust is so essential. So our next question. A question from Rob on Facebook. He says, how long is a pre-approval good for?
Not really an expiration date on a pre-approval letter. The credit report expires after 120 days. So worst case, you've got your letter, you're out shopping. Let's say it takes a little bit longer to find that right property. We may have to go back and ask for an updated bank statement, but during that time, you got to make sure you're paying your bills. But there's not necessarily a date on that.
And that's, from a realtor's perspective, you want to make sure you have a current letter. Because again, if you're in a competitive situation and your letter is maybe 3 or 6 months old, they might question, are you legitimately qualified? So you
Things
just, you got to,
change in
yeah,
your credit
things
history.
absolutely change.
Yeah.
So be on top of things. Be proactive. And lastly, Rob from Facebook says, do they have to check my credit? I know my score. Ooh.
Yes, you have to check credit. It's not just about the score that we mentioned earlier. We need to look at your liabilities. What are your debts? What's your total history? And so we need to look at your credit report. But that's just to provide better service to you. That's to put some value behind that letter. So that's the first thing we're going to want to do to help you.
Yep, great. Well, thank you everybody for joining us today. It's been such a wonderful program to talk about mortgages, and we enjoyed having the panel here. And I just want to say that Prime Lending has been so nice to offer a $250 credit for those people who use Prime Lending for their closing costs.
Yeah, you can, if you walk into one of our local branches, or if you call the number on our website and just reference the Google Hangout, that $250 reduction in your closing costs will be in play. So we'd like to help you.
Great. And here at Realtor.com, we still will have our Twitter hashtag. So hashtag Mortgage101. Send further questions, and we'll continue to answer them. And we're going to have more panels like this, and the series will continue to educate consumers. Again, Realtor.com is here to help and to help educate you on the home buying process. Thank you.
Thanks.